Wait until fundamentals improve before buying Plug Power stock. To some, the high uncertainty around Plug Power mean big opportunity. There's massive upside potential if the hydrogen-focused renewable energy company proves its skeptics wrong. Given that there'll likely be plenty of time to buy if this bull case plays out, consider it best to wait and see for now. Let's dive in. Here's why the bulls believe Plug Power stock is a bargain. Welcome to Timely Investment Research. Uncertainty often means opportunity, especially with speculative growth stocks. That's the argument many investors bullish on Plug Power may be making. Since 2021, there have been increasing doubts that the bull case for Plug Power stock will play out. That's why you can buy shares in this hydrogen energy company for just $8.86 per share today, versus prices topping $75 per share back in January 2021. For those very enthusiastic about this stock, if the company can prove the skeptics wrong and deliver results in line with long-term projections, there is massive upside relative to present price levels. Yet, while investors are free to enter positions today, there may still be a way to exercise caution without missing out on Plug Power in the event a comeback takes shape. Let's take a closer look and see why this is the better approach. The reasoning behind Plug Power stock's bargain appeal. Trading in the single digits, Plug Power may be low-priced, but based on its current financials, it's hard to make the argument that Plug Power is good value in the classical sense of the term value stock. However, to those holding Plug Power stock as a long-term position, it's a bona fide bargain, at least compared to the aforementioned projections. According to the company's most recent investor presentation, management is targeting $5 billion in annual sales, with operating margins of 17% by 2026. Management is also targeting $20 billion in sales at a 20% margin by 2030. Compare that to Plug Power's current market cap of around $5.3 billion. It's clear that in the event it merely comes close to hitting these projections, shares would undoubtedly rise to levels many times over today's prices. Still, there's a reason why Plug Power trades at such a high discount to these lofty projections. Government incentives from the US, the EU, and other jurisdictions could spur a big jump in demand for green hydrogen or hydrogen produced without fossil fuels. It remains unclear if such factors will cause big operational improvements for Plug Power. Don't expect an immediate liftoff. A potential green hydrogen boom could cause this company achieving the scale necessary to become consistently profitable, resulting in big gains for Plug Power stock between now and the end of the decade. That said, it's not as if shares are going to spike back to past highs due to a single game-changing event. Mainly because uncertainties holding down Plug Power shares still need to ease. For instance, even as legislation like last year's Inflation Reduction Act may provide substantial tax credits to spur green hydrogen production and use, the details regarding these tax credits are still being worked out. In addition, Plug Power cannot generate $5 billion, much less $20 billion, in annual revenue from its existing infrastructure. The company needs billions in capital to build out production capacity. Yet, as KeyBank's Sophie Karp argued last month, obtaining this financing could prove difficult in today's economic environment. Plug may end up having to push back its projection, much like it has done in the past. In short, even assuming that green hydrogen becomes a major energy source, bullishness for this stock will return gradually, meaning there's no rush to enter a position. Wait and see is your best move. It's not only the two headwinds that I mentioned earlier that need to pass. Even if Plug Power obtains the tax credits and financing needed to scale up, enabling it to scale up into a multi-billion-dollar enterprise, it will still need to show it can turn this massive revenue growth into high profitability. As I've mentioned previously, Plug's poor past performance makes it wise to be skeptical about its ability to hit ambitious profitability targets. Again, the company needs to climb many hurdles before the market renews the level of excitement for it last experienced over 2 years ago. With this in mind, here's the takeaway. Wait and see is your best move. It's worth risking paying up for shares at a later time. By then, the bull case for Plug Power stock could go from shaky to ironclad. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.